Sometimes one single piece of news can define an entire week, maybe even an entire year. And last week, we got one of those. It all comes down to a fundamental battle for the future of AI. It's a clash of titans versus a wave of new challengers, and this whole story kicks off with one absolutely staggering number. And this is it, $40 billion. This one number completely dominated the headlines last week. It's what Google is planning to invest in the AI company Anthropic. And honestly, it's a number so big it forces you to stop and ask, what in the world is happening in AI right now? So yeah, that $40 billion figure, that's really the jumping off point for our story. It's a massive signal that the AI arms race has entered a totally new phase. It's not just about who has the smartest algorithm anymore, it's about who controls the actual infrastructure underneath it all. And a massive investment like this, it shines a huge spotlight on what is probably the single biggest challenge facing the entire AI industry. It's a problem that analysts are starting to call the Great Compute Bottleneck. So what is this bottleneck really? Well, put simply, it means building the most advanced AI models isn't just about clever code anymore. It's a game of raw resources. We're talking chips, cloud computing power, and just sheer energy. The costs have become so astronomical that they've created this huge barrier to entry for pretty much anyone who isn't a tech giant. And the fallout from this is, well, it's pretty straightforward and pretty severe. When your costs skyrocket like this, what happens? Competition just shrinks, because very few can actually afford to even play the game. And when competition dries up, power consolidates into the hands of just a few massive companies. You get a totally centralized system.
Okay, so if centralization is the problem, is there an alternative? Is there another way? And that question brings us to the whole other side of this story, a completely different approach that's bubbling up from the world of crypto and blockchain. It's called decentralized AI.
In this slide, it just lays out the two competing visions so clearly. On one side, you have the incumbent, centralized AI. It's controlled by big tech, the models are closed source, and it takes an unbelievable amount of capital. But on the other side, you've got the challenger, decentralized AI, where the network itself is the owner, the models are open and verifiable, and it's accessible to builders from all over. So how does this decentralized model, people are calling it DAI, how does it actually work? Well, its whole value proposition really comes down to three key ideas. First, you have distributed GPU networks with projects like Render that let anyone rent out or use computing power. Second, you get verifiable model training, which projects like Bittensor are pioneering to bring transparency to the process. And third, you have open marketplaces for all these AI models. You put these together, and the goal is to break that compute bottleneck.
Okay, so we've got these two big ideas, these two competing stories about the future. But where's the money actually going? What were investors and traders really doing last week? Well, the data shows a pretty clear trend. The capital is flowing towards projects with real, tangible utility.
And wow, you can see it right here. The AI theme was just on fire. Tokens that were directly tied to AI saw these huge gains. I mean, some, like USD.ai, surged over 146% in just 1 week. The market is clearly really excited about this whole space.
But beyond just chasing the hype, a smarter, more classic investment strategy started to take hold. It's all based on that old saying, right? During a gold rush, the surest bet isn't always on finding the gold itself, but on selling the picks and shovels that everyone needs to start digging.
And that's exactly what we saw happen in the market. Traders started piling into these picks and shovels plays. We're talking about infrastructure projects, the foundational tools that both AI and crypto rely on to even function. They saw incredible demand. A project like Spark, for example, shot up almost 95% as traders rewarded the essential plumbing of this new digital economy. And this focused on real, solid fundamentals wasn't just happening in the AI space. We saw the same pattern across the crypto world. Projects like Aave and Flare got rewarded by the market for actually improving their core economics through governance. Things like routing more value to their treasury or cutting inflation. Even huge events, like that massive Layer 0 token unlock, became a real test of the market's appetite for core infrastructure.
Okay, so let's pull all of this together. What does this mean for what's coming next? Based on everything that happened last week, I think there are 4 key trends you're going to want to keep on your radar.
First up, keep your eyes on that Google and Anthropic deal. Will that $40 billion actually turn into faster product rollouts that can really challenge OpenAI? Second, the DAI leadership test. Can this decentralized AI space grow beyond its current stars, like Render and Bittensor? Third, watch for that governance-driven value. Are more projects going to follow the lead of Aave and Flare and use governance to improve their fundamentals? And finally, the classic supply versus demand story. How will the market absorb these huge token unlocks that keep on coming?
And all of this, it just leads us back to the biggest question of all. We are seeing a flood, an absolute torrent of capital pouring into these centralized AI giants, making them stronger than ever. But at the exact same time, this powerful, decentralized alternative is building real momentum. So, in this billion-dollar battle for the future of intelligence, can the challenger actually compete with the incumbent? That's the question that's going to define the next chapter for all of us.